Hey folks, David Frost, mystrategicforecast.com. Welcome for another episode of Common Sense Technical Analysis. Today is Thursday, June 26th, 2014. You're looking at an S&P chart, or you're looking at the SPY, which is the mirror image of the S&P. And basically today you had, for all intents and purposes, you had a flat day. S&P was down a couple of points, Dow was down 20 points, NASDAQ was flat. And basically, you had a down market in the morning. The excuse was a former Federal Reserve governor came out and said higher interest rates are ahead this year, and so the market goes down. But the market was going down. They used that as the excuse. But what happened was the bears showed up in the morning, and then the bulls pushed them back into hibernation by the afternoon. We finished basically flatline for the most part. So light volume again, and that's what happens when there's no volume out there. It's easy for whoever wants to push around the markets, and whether it's the institutions, the Fed, a combination, whatever it is, it doesn't matter. It's happening. We know it's happening. We're still in a bullish market, and for the next few weeks, we're going to play it that way. We still may have some downside, into maybe early next week if we're going to have it at all, and then we'll probably get a float up for the last couple of days into the 4th of July weekend, and that's basically the worst case of what you can expect. I don't see a lot of downside, and if we do see any downside at all, like I said last night, we're looking at this maybe this 190 level in the SPY. That's basically just coming beneath the 50 period moving average, and that's about the largest downside I would expect. Coincides with this pivot high, this gap fill here. So it just makes sense, right? Common sense technical analysis. Where's the downside? Well, here's your gap window here at 191 for the most part, and then your further downside is basically 190, let's call it. Pivot high, gap fill, 50 period moving average. I mean, it's obvious. It's common sense technical analysis. It's really not even technical analysis, just common sense. So anyway, so that's it. Really nothing happened today at the end, and let's move on. I don't want to waste a lot of time on nothing happened. So let's go to interest rates, because the 10-year and the 30-year interest rates were down today. Bond markets were up today, and that was probably a function of the market going down, and then the bond market just stayed up as the market bounced back. So what you have here is you still have this low in place, and you might come down further. You might fill this gap here at 246 and a half, 2466. And if we do and we start back up, that's actually a bullish sign, because you would have made a higher low. On the 30-year, you have much the same deal here, although you're getting close. If you make another low here and continue up, that's going to go right back up to the 355 I've been talking about, which is my near-term target. And if you look at the weekly chart here, you'll see that, if this did bottom, then there's a long runway here for some upside. It's not going to be easy. You got to get through these moving averages, and you've got to get some momentum going. But in the right scenario, it certainly could have a lot of upside left. I mean, 355 on the 30-year, which is my near-term target, is still all the way up here. Look where we are now. So that's a long runway from here. We all know I'm in the TBT trade. It's back a little bit negative. It's been positive. It's not been positive. It's kind of near the flat line, but I'm going to stay with it, because the risk reward is there. The reward is a lot of upside. The risk is not a lot of downside. So we're staying with that trade. Let's go over to the gold market. Gold held in today. It was GLD was down. This is GLD. It was down 26 cents. But if this is going to be a higher low, then there's higher prices ahead. But I still think there's a better low due in a few weeks. So I'm watching it. I'm certainly going to issue a trade alert when the pattern presents itself. I'm kind of licking my chops as we speak. So look out for a trade alert on gold. That's for the members. They'll certainly get the trade alert on gold. Oil, same scenario on oil. Was down a touch today, but we're in a bull market in oil. This is the weekly. Let's go over to the daily chart. Oil, this is bullish. This is way bullish. This is above the 50, the 20, of course the 200. You've made sideways consolidation. I still think the crude contract could have about 110 on the upside and 40 to 40, 50, $40.50 on the USO. Not out of the question at all. What else do we have here tonight? Let's take a look at the VIX. The VIX was basically flat today, and you still have this low in here from a couple of weeks ago. This is not even a couple of weeks. It was from last week. It was from the 20th of June. And basically, if this low holds, it looks like the interest rate chart. It looks like higher prices are ahead, but it's got to get going. It's not going to happen on light volume. Nothing's going to happen on light volume. We're going to keep churning around on light volume if that's the case. But guess what, folks? Light volume, what follows a light volume market or what follows a low volatility market? A higher volume market, higher volatility. It's just inevitable. We just don't know when. Well, I know when, but my members will know when it happens. We're going to look for a signal, and we're going to be in the right position at the right time with the right magnitude, playing it the right way. So look out for some trades there. I want to look at any stock charts for you tonight. Let's bring up a chart of Apple. You know why? Because everybody talks about Apple. And folks, you need to know Apple has a lot of short interest out there right now from institutions. So it's got a high percentage of the holding is short. I don't know the number offhand, but I remember reading that earlier today. So it's something you need to be aware of, because it looks like it's getting cheaper and people want to buy Apple because they're going to come out with the watch later on in the year, or the wearable devices. That seems to be the next craze. And that's all well and good, and it may go higher. But right now, if the market's going to trend down for the next few days, Apple probably trend down with it. If the market floats up into the 4th of July holiday weekend, Apple will probably float up too, maybe a couple of bucks. But, there's going to be a lot of resistance here at about 92.25. A good level to buy Apple, a great level would be this gap fill here. This is about $80, but we're ways away from $80, obviously. So we'll see what happens. If we see a pattern develop, I'm going to let the members know. But right now, there's really nothing going on in Apple. If we take a look at a longer-term chart, this, of course, is post-split. So here's the troubling chart, right? It looks like you're breaking out here, and it looks like it wants to go higher, and it may want to go a little higher. It may want to get to 100. It makes sense that Apple may get to 100, but what's 100? Double top. I just don't see this getting through double top unless something happens that just drives the craze and the momentum in the right way. But if this goes higher, we may take a run at 100, but double top, it's certainly going to be a short-term pullback anyway, and that would be a great day trade, if you will, or at least a swing trade off of 100, maybe a Pierce of 100, 101, $100.50, something like that on Apple. But we'll see what happens when we get there. But this is setting up to go higher a little bit. We had a little bit of a bullish consolidation on the weekly chart. So another week or two, and you might pop higher. We'll have to watch that one. On the daily chart, it's just it's chopping around here, and it got beneath the 20-period moving average, which now it's going to struggle to get above it. It's going to struggle to get above this consolidation here. So we'll see what happens. I'm going to let the members know if a trade alert is available or a trade pattern is available for a trade alert. Anyway, no more babbling. I think that's enough for tonight. It's just a snapshot. Nothing happened today again, but I'm going to keep giving you updates. David Frost, MyStrategicForecast.com, Common Sense Technical Analysis. We'll see you in the next episode.